Hello, hello. How's everyone doing? Welcome to Our Stock Trades. Hope you're having a wonderful Monday. All right, no camera today. No camera today. I look like crap. All right, but I wanted to go ahead and pretty much talk to you guys about a couple of things that we're seeing. I do want to open up this graph here so we can take a look here. Okay. So you remember we talked about how we have the declining phase, the accumulation phase, and the advancing phase. Again, when we start seeing a level off after an advancing phase, we start seeing a declining phase. Usually hedge funds like to sell here and hedge funds like to buy here. But again, it's very hard to look at a stock price move and actually see if it's going up or down or staying the same, which is why we like to look at the simple moving average. So we're just going to go ahead, come here and bring the simple moving average. Now there's a lot of trend lines here. I'm going to delete one of them. So you remember how I said we're going in an ascending wedge, and as soon as just forget this line and forget this line, focus on these two lines. You see how automatically once it basically broke this wedge, it started going down and formulating a new channel. So channel 1 reverted down to channel 2. Okay. So what I'm going to do is I'm just going to remove this. Okay. To make it easy for folks, because I know too many lines can get a little hard. So it's very hard to see if this is basically sideways. It seems just going up and down, right? But you can see this smooth line here. This is the 200-day simple moving average. So if we were to zoom out, you can see the 200-day simple moving average has been going down drastically. Literally month over month, it's been going down. But all of a sudden now you're starting to see it level off. You're starting to see it almost form a floor, right? And in algebra, we like to call this a minimum, right? So if you look at a parabola, if you go ahead and take a look at a parabola and look at its minimum, this is exactly what we're basically seeing right now, okay? We're starting to see it drop down and formulate some type of floor, some type of minimum. And this here, I like to call the accumulation phase, right? So if you go here, this is the accumulation phase. And we're starting to see it now, okay? We're starting to see it right here. I assume in the next 6 to 9 months, as this progresses down the level off, we're going to start basically seeing more institutional investors jump in. Again, it doesn't take a lot of computer programming and coding to tell a computer, hey, whenever you see stocks that pass their 50-day MA, 200-day MA, and their 50 goes over the 200-day MA, and then when the 200-day MA stabilizes, go ahead and alert me when it becomes next to free cash flow positivity. That's not hard to make, okay? It's an easy code, okay? But they slap on a popular term called a quant computing system. I mean, come on, right? If you understand the variables, if you understand the basics of a pencil, you can reconstruct the pencil to do some crazy things, okay? So, there's your reverse engineering there. What I'm going to do is, you can see these downward channels here. I'm looking at anywhere between $1.17, $1.16, $1.15. If it goes ahead and passes this, we're going to start creating a new ascending channel up because it's going to break this descending channel. So just like how you saw the 200-day MA go down rapidly, once it basically stabilizes, it will recover rapidly too. That's just how it works, okay? All right. I'm going to just re-put those channel for me for a reference for the future. Now let's go ahead. We talked about this. Let's go ahead and take a look at seasonality really quickly. Okay. So as you can see in the month of September, this looks at all the months of September since it takes like 150 years in the market. And you can see there's a lot more red days in September than there are in October. Okay. In fact, there's a lot more. If you look at the high days in September, the high days in October are a lot higher than the high days in September. But if you were to count the low days, there were 17 market lows on in September versus 12 in October. And I assume, if you look at stocks right now, just Google stocks. I'm sure I'm sure CNBC probably has something about this. Here, oh yeah. You just here, there it is. You see right there. S&P 500 rises Monday as traders try to recover some September losses. Again, historically, the month of September has always been worse. So now we're going to start seeing kind of reversion back to the mean of how things were in August, right? So we went ahead and talked about this, and that this only proves the point. As you can see, September, you can start seeing dumb money, which is in red, started to sell, right? And now smart money is basically coming back up. So you could start seeing, in terms of smart money versus dumb money, you could start seeing that, September is a month for institutional investors to trick retail investors to sell their holdings in September, because if stocks go down, they're terrible, right? And we're about to be in a market crash, right? And I'm sure if you look at other YouTubers, I'm sure they took advantage of that for clicks and views to say, the market's about to crash. The Federal Reserve is going to blow up the market, yada, yada, yada. Like just noise, just a chihuahua barking, okay? All right, so there it is. So there's the smart money, okay? So now let's go ahead really quickly. And so if we can just go ahead and look at her. This is a quick DCF. Takes the short-term movements. If you look at it here and take a look at Clover, you can see that the stock price is here, and the beta is, this is beta. Beta means how volatile the stock is. It's poised to make an upward trend, right? And again, this is not a full intrinsic value calculation. This is more of like a short term. I should change the name, honestly. Okay. So now that we did this, what I wanted to do, as what I basically stated within the accumulation phase of institutional investors, we saw a lot of tax loss harvesting here, right? Which is indicative when you go ahead and do the analysis. If you were to look at institutional investors using our stock terminal, you can see in the past 6 months, there was a decrease in around negative 6.51%, right? There was a decrease in ownership. Institutional investors own about 97 million shares. I mean, we could just put 97 over 477. It's about 20%, give or take, plus or minus 2%. Right. So what I want to see is this start increasing as the company gauges into free cash flow. Now, let me go ahead and say something really quickly. If you go ahead and, let's say, for example, go to Wall Street really quickly and look up Tesla, right? We can go ahead and look at Tesla really quickly. And as it basically processes the data. And if we go pick up Tesla, and if we go to free cash flow, Tesla became free cash flow positive in 2019. But you have to understand, the market is slow, which gives us an opportunity because Wall Street needs to move billions of dollars around. I mean, it takes a long fleet, especially for stocks that no one knows about, right? You got to get approvals, yada, yada, yada. So if you go to 2019, when Tesla went from negative free cash flow to positive free cash flow, which you can see it from 2018 to 2019, if you go to Tesla stock, it didn't actually start going up. Here's 2019. It was like $17. It didn't actually, start going up until right around here, and then the money started moving in it, and that's monetary policy as well. So I expect that Clover will see some slight movements, but it's going to take time for these people to come in, which is good for us because then we can calculate the value. Know definitely now within a reasonable doubt there's value, and then essentially wait for Wall Street to figure it out. But I expect to start seeing this start to increase. Okay. And I'm just kind of curious to see this for Palantir, because we've seen a lot of people talk about Palantir now. So you can start to see institutional ownership in the last 6 months started increasing to 11% ownership, right? The increase is 11%. This is just the short-term 6 months. It doesn't mean that they own 11%. You would have to calculate the outstanding shares of Palantir, the share float, which you can calculate here using the stock terminal. They have about 2.1 billion shares. So, which is insane. If you look at institutional shares here, let me make sure. 2,151,829,976. So based off of this calculation, 861 divided by 2151, institutional investors now own 40% of Palantir, right? So I want to start seeing this increase in Clover, right? We already starting to see it in the accumulation phase. And again, if you don't recall, once Palantir became profitable, that's when institutions stepped in. Again, it takes some time. Okay. All right. Which is good to your advantage. All right. So let's go ahead now and let's look at the revenue estimates for Clover really quickly. Go ahead and look at the revenue estimates for Clover. You can see that analysts in 2024 and beyond, and a little bit near the end of 2025, are pricing in for a revenue jump to go from anywhere between $4 to $5 billion. Okay. Right now we're at $2 billion. So that's a big increase, which is why I'm doing the intrinsic value calculation at around 30, 40, 45, 50%, because that's what it takes to get to that price. But to be honest with you, I think, if you look at the All In podcast, the last episode, Chamath Palihapitiya says that he was off by 1 year. I mean, I may have been off by a year as well. I said that the market's going to be late 2024, 2025. He's saying now 2026. So I still think it's 2024, 2025. But again, we were expecting the Federal Reserve to cut. At least Wall Street was pressuring it. The expectation was they stay the same. Wall Street was pressuring the Federal Reserve to cut interest rates. So perhaps maybe this may bleed into 2026. Just to let you know, let me give you kind of an example. There's a company that was unprofitable, still is. It's called Jumia. It definitely soared like crazy. But if you look at it before, so you remember when monetary was 0%? If you look at it, it was trading in the upper 40 range, even before monetary policy was bad. So I guess what I'm trying to tell you here is that easy money or just speculative money is going to essentially return, right? And you want to place yourself on the opposite end of the trade there. You want to give it to them. You don't want to receive, right? Okay. In terms of now resistance and all this stuff. So really quickly, just like I told you, this trend line right here, we want to pass it. So let's go ahead and see the line here. So all eyes right now are on the $1.14. If we can go ahead, it's been trying to basically pass this. If we can go ahead and surpass this, hopefully by the end of, because again, this probably is the month of September and October, and when they release their Clover Assistant, you can start seeing some movement here in terms of the stock price, the support and resistance lines. And then if you want to zoom out and looking at and by the way, these are artificially intelligent planted, so they use AI to plant. So now also, once it goes ahead, the next one is $1.32. You can see there's a battle here and here. So the next one is here. But really what excites me is if we were to zoom out and take a look at the upper, you really can't tell much here. You can't really see here. But what I do want to say is once we go ahead and pass these regions, it's going to fly. I mean, this thing's going to just go whoop. It's going to fly up, and we're going to start trading at these levels again once they realize their intrinsics. But anywho, we went ahead and did some great analysis right now, talked about the simple moving average and whatnot. Just a quick shout out. If you want to purchase my book, it's on Amazon, How to Find a 10-Bagger, very informative book. And if you want to go ahead and take a look at our #1 release, Intelligent Investor, you can type in my name on Amazon, or you can go down to the link below, and there's more information about that. Hey, Con, how you doing? How's it going? Back again? Absolutely. I just wanted to go ahead and talk about this regarding the seasonality changes. So in this video, we talked about the technical analysis of Clover. We went ahead and talked about the seasonality changes, how smart money is moving back in. We did some analysis regarding the short-term DCF, institutional investors, related it to Tesla, related it to Palantir, talked about the revenue estimates and the artificial intelligence release platforms, talked about minimum and maximums, and talked about how September Wall Street's trying to recover their losses and how easy monetary policy, actually stocks were increasing before that, and talked about our book. So that was, I think, in 14, 15 minutes. I think that's definitely a good one. All right, guys, I'll see you on the next one.